Let's start with the Treasury market here. If you look at the 10-year note, we're not seeing that much movement here. We did see a drop in yield going into the minutes, although we also had a 5-year auction just about an hour ago that showed relatively strong demand, so that could have been contributing. At this point, we're now seeing a little bit of buying in the Treasury market and a decrease of 1 basis point in that 10-year yield. As for stocks, not really budging here on these minutes, pretty much where they were before and in a very tight trading range, the tightest that we have seen at least thus far this year. So outside of stocks and treasuries, let's take a look at the U.S. dollar to see if there was any kind of reaction there to the minute, particularly to more detail about how the Fed is going to be shrinking its balance sheet. There we saw a little bit of a leg lower, and it looks like that is accelerating here for the Bloomberg dollar index. Gold prices as well are something to watch in the wake of these minutes coming out. And if you look at the price of gold, we see a little bit of uptick there. So opposite what the dollar's doing, as you might expect. And finally, the Fed's dual mandate. You can track it on the Bloomberg by looking at one of our charts from the terminal, where we look at U3 unemployment as well as inflation. Here it's GIA #BTV 3476. As we know, the unemployment rate has fallen to where the Fed was targeting, but core inflation as measured by the PCE is still a little bit lower than the 2% target. It had been sort of hugging that line before taking a little bit of a leg lower. So as Chris mentioned, the Fed House now has more data to consider for its next meeting, ladies.